All right, so the visuals up on your screen are for HPL Power and Electric, and it's the new listing today. It was a 361 crore IPO, a little subdued. I mean, as compared to the other IPO listings that we've seen in the past, something like an MGL or the other mid-cap listings that we've seen, the overall subscription was around 8 times, and we've seen stellar subscription numbers for the issues we've seen in the past, and I mean, over 50 times, almost 100 times, but this was a little subdued. A few metrics about HPL Power and Electric. I mean, we interacted with the management. One of the pain points which really comes out is that their working capital cycle is a little strange. So around 130 crores of the proceeds that they receive is directed towards reducing their long-term debt. They're looking for channel financing. The disparity and the gap between the days receivables outstanding, that's the days sales outstanding, and the days payables is almost 2 months, and that is where the pressure point is coming from. Their interest cost of FY16 was around 84 crores. Their EBITDA was 160 crores, and that has been mostly the trend because their interest cost has been almost 50 to 60% of the EBITDA on a every financial year basis. That's been there for the last 3 or 4 years. So that is one pain point as far as this company is concerned, which stands out, which was highlighted by brokerages across. Save for that, the company operates in 3 or 4 segments, which include metering, lighting, switchgear, and wires and cables. Now we know that these segments are obviously full of competition, especially the lighting segment and the LED segment. That has faced some pricing pressure as well, but the margins for FY16 and the revenue contribution is held out. In fact, it's the market leader in the metering segment, HPL Electric and Power, and it is followed by other companies like Genus, which has a 19% share, Secure, which has a 15% share. HPL Electric and Power is betting big on their metering segment. They have a 20% share, and they are the market leaders in that segment. The revenue contribution by way of that is almost 50%. I mean, it's 47% of their overall revenue contribution. The lighting segment contributes 24%. The switchgear segment contributes 15.4%, and wires and cables around 14%. The lighting segment, as we know, as I was saying, the LED segment is also has other competitors in the listed space: Crompton Greaves, Havells, Bajaj Electricals, and so on and so forth. So there is some strong competition there, but the management is positive on the outlook going ahead. The switchgear segment contributes 15.4% to the revenues. The valuations, let's speak about that as well. The stock is a little 5.6 to 6% down. The upper end of the price band, in fact, was 202 rupees per share. So we are seeing a 5.4% cooling off from those levels. It works out to be 25.6 to 25.5 price to earnings multiple at the upper end of the price band. So obviously this is lesser now, and the valuations compared to its peers is low. But again, as I said, possibly it justifies a lower valuation compared to the peer category. The risk categories, 2 legal disputes were pending, and there was some injunction pertaining to the issue itself, but possibly that's out of the way. There was certain issue regarding the trademark litigation as well. But overall, it has been a subdued listing and pretty much in line with what brokerages had to say. From the overall book, from the anchor book, they raised around 108 crores. Let's see from here on how the listing pans out and how the prices pan out. But in comparison to the kind of listings we've seen in the past, this for sure being a subdued listing below 200 is where HPL Electric and Power is. Let's start off with